Hey, here we go. Welcome, guys. What's up, my brothers?
Another day, another dollar.
Hi, GP.
What's going on?
Or a loss of $1? I don't know. The market is making me have the scaries, Nick. Let's look at the cues as we always start off. But first, we got to do intros. Bags, JFDI, GPAISA, or Gautam, Nick, and Ben, respectively, there on your screens. As you can see us, you are watching the Community Rip live right here on Stocktwits. It's 2 p.m. Wednesday. We would rather not be anywhere else because obviously we're here with you and we love you and we love to be here together. But enough with all the niceties. We want to talk about some market. GP, I want to use your quote from our pre-production meeting. Market fuckery.
Yeah.
It is constant liquidity backtests and sweeps, right? Like if you're looking at this, like since Friday, where all the technicals stopped working, right? As soon as that tweet came out, it was just straight down and broke every support level. Fine, whatever. That's what it is. That's when you know to get out of the way when your identified technical levels aren't working. And as soon as we get back to Monday, we've established a proper technical levels, and we're right now for the third straight day, we're struggling with the 61% retrace of the Friday bar, right? So you still have to have your caution flag up, but what I will tell you is since that Friday bar, we've been doing higher highs and higher lows. So even though the liquidity sweeps are happening, we're pushing higher. So just keep that in mind.
Yeah, we're 2% up off Friday's low.
Yeah.
So is it just fuckery, GP? I mean, you did. Let me pull up the SPX chart. You did call the level, and we noted it there, 6,700. Clean rejection, right?
It was exactly 67.38, right? And
I'm sorry, 67.38.
I know. What I'm saying is, it's not me. It's just the fibs, right? I'm not doing anything magical here. It's fibs that I had drawn, and I looked back. I was going through. I was like, when did we first start? We started talking about that level in July. About that's where we're gonna have concerns, and I find it always. Like, it's not a pat on the back, but I always find it crazy that you set these things and then they listen to them. And it's like, wait, what? Right? Like, it's like, I don't get it. It doesn't make any, it's like voodoo, but dude, that is the second time we had the same thing happen in January where we had the 6120 rejection, which was the 100% fib number. And you know what happened in March and April, right? So, it's been kind of insane, but yeah, it looks. I think people want a bigger pullback. I thought we could get a bigger pullback, but I'm not so sure anymore based on price action we've seen so far the last few days.
Yeah,
I'll get to you in just a second. Explain why you don't think there's going to be a bigger pullback according to the last couple of days, because I can play devil's advocate here, but I'm not going to.
So the first thing that we did out of the big move down was put in a bullish piercing bar, right? The following day, bullish piercing bar is you have this big down day and there's no follow through, right? No follow through is your first clue. And bullish piercing starts at a 50% retracement of the prior bar. Anything above that is more gravy. And it actually closed bang on, I think, 1 point above the 61% retracement of the following bar. Right?
You mean this big flush bar here, this one? That's what I'm talking about?
Correct. Okay. Right. So, and now we have spent the last few days just rotating around that 61% retracement, going back and forth, but we're making higher highs and higher lows in that sequence. So I'm assuming this is all re-accumulation from everyone who got stopped out on Friday, because everyone got... We've talked about this, right? In terms of 1 foot out the door market, right? So when Friday happened, everyone was like, cut. Magically, they're all long Monday, of course. Yeah. But that was the thing, and so it looks like reaccumulation from me, because that was a nothing burger tweet, and maybe it becomes a nothing burger tweet again. But just look at the timing of these tweets, right? Like Friday afternoon, yesterday at 3:30 p.m. or whatever it was, right? Like these are all kind of like, I guess, conspiracy side of me is like, yeah, this is all kind of orchestrated and planned and stuff. So just listen to the price levels at this point and look for those liquidity sweeps and try to trade. You're going to have your head on a swivel.
Hello, Nick. Welcome to the show.
Hey, thanks for having me.
How are you?
I'm doing great. Yeah.
Well, I know we want to talk some other things, but I really want your take on what you get out of the action 3 days post this dumpster fire of a candle.
Yeah, I don't think anybody expected that hard of a sell-off or to pull in as hard as we did. So, looking at it, like, let's just say the SPX, you've got the range from 60 to like 6,700. The break above that 6,700, because of the candle on Friday, you would have called that a breakout failure. So my first thought was that price was going to kind of push down into like 64, I don't know, 80-ish, 6,500, because it would overshoot the low of that range. The only thing that I sold out on Friday was a lot of like recent Momo trades. Anything that like I've been in since kind of the tariff, like the sell off, the follow through day. Like I didn't touch any of like my core shit. I was kind of thinking like if we do get a bigger pull in, and SPX does kind of want to fuck around and like kind of move towards what GP was saying about like I think 61 or 6,200. I felt like that was going to be my opportunity to like really leg into positions that I've been in for a while. That aside, I was totally prepared to buy a gap down on Monday.
Me too, Nick.
I didn't. The gap up, I thought was like, because the McClellan closed out at like negative 210 on Friday. I was like, holy shit, this is it. Like, this is fucking sick. Like that, we're gonna get this all in a day. And then on top of that, like the crypto stuff kind of happened. I actually found the gap down yesterday to be much easier to buy than any of the action on Monday. What I thought was going to be, or what I thought could have been the absolute ugliest, was if today or tomorrow we saw like a nasty outside reversal. So today we gapped higher, which I was like, fuck, like, are they going to fucking sell this thing off hard? They didn't. They held the gap. And so kind of like back to what I've spoken to in the past, when a gap holds for the first 60 minutes, I either think it's going to be a gap and go day or a gap and melt day. Or if price does reverse and it does fill that gap, I'm going to look at that gap fill as more of a support area, at least intraday, as opposed to like it being just an all-out flush. Sure, we could get off the call and we could sell off hard into the close and we could still get that kind of action. But as of right now, we're kind of like that's kind of what happened. We sold off, price kind of reverted back to fill the gap from yesterday, and now we're kind of holding. So, and again, to kind of like GP's point, the 50% on that bar is like 66.55, and we're kind of holding above that right now. I would really like to see us hold above that. I think if we close below it, there's a chance we see some further weakness. If we close above it, I think that definitely bodes well for the bulls, at least here in the short term. And despite all of that, we're basically like, so long as price remains within that bar, which, like, considering where's the Sorry, I was trying to pull up the weekly.
No, I will gladly go to the weekly because that's what I want to talk about.
Yeah, it's pretty much an inside week. So the bar that we have, like, this is, despite how ugly it is, like, this is a super easy bar to play against. Like, from like a risk reward perspective, like, you have the pivots. You could use the 50%. You could use the high, the low. So long as price stays above the low, like, stay long. If you want to, like, sell into the high, or like wait till that pivot gets taken out. I don't know. That's kind of how I'm looking at it. How I'm sitting and kind of watching it right now. I don't think that, we've talked in the past about your tool belt, especially when it comes to like technicals, time frame. I think that you really need to lean into your tool belt and like really respect the risk, and define your risk. Like, you've got to like follow your rules, I think, and try to avoid getting like chopped up while you're in this range, because again, when we're talking about like, bias and, the perma bears, perma bulls, short-term bears, short-term bulls, like, I don't know, like, you're running the risk of getting ping-ponged here if you're not already in existing long positions and just riding the trend. At least kind of what I'm seeing.
I was completely out of pocket on Friday. Go ahead, Nick. Sorry.
I meant to touch on the conspiracy piece of it. I love going down the conspiracy theory route. Like, people want to act like Trump and Z are like enemies. I think they're just puppets. Like, they're literally just playing a part. Like, they already know what each other's gonna tweet and do. Like, I don't think, like, I could totally be wrong. Like, I'm not, whatever. But I do agree. Like, I think that there is a weird timeliness of it that makes it feel very orchestrated. I don't know. I'm totally with you, or with GP on that.
Well, I was completely out of pocket on Friday. I saw the market was up at some point on Friday, and then it turned, and I was busy doing a plumbing job. However, after it was all over, I had multiple texts from multiple friends like, "Oh my God, what's going on?" and freaking out. And I just simply, I'm on the SPX. I'm just going to go to the Qs because you know how much I love the Qs. And I can get rid of these.
That's a hot dogger?
Look, not the hot dog, no. But look, we're exactly where we were 2 weeks ago. Like, let's wrap our mind around like not freaking out over everything in the world. Like, let's normalize being rational people here. We're exactly where we were 2 weeks ago. We were basically bang off of the weekly 9. If I go to the SPY, you see the same thing. Bang off the weekly 9, right? Exactly where we were 2 weeks ago. If you want to look at these daily candles, which I don't really care about the daily candles. I mean, look, guys, if we're freaking out over every time this happens, right? Like, if we call this the breakout, right there, all right, I've got it already marked with this pink line right here. If we're freaking out over every time we retest the breakout, we may as well just put all our money in the SPY or the QQQ and just dollar cost average every week or every 2 weeks or monthly or whatever, and just turn off the damn show and retire from trying to trade. There's my hot take. I wasn't going to play devil's advocate, GP. I just think we need to have some rationale and just be calm here and not act like in the moment.
I think what compounded that, though, was like, I don't know, when the crypto stuff hit, that was freaking gnarly after the close. Because, man, I was trying to fucking get filled I was trying to get filled on tons of shit, and like I kept getting emails and orders saying your order's been rejected. Your order's been rejected. I'm like, what? I even tried market orders. I hit like a buy market order, and it still wouldn't fill me.
We need the Eric Andre gift. I need in.
So
let me in.
In light of that, I feel from a lot of the stuff that I was consuming over the weekend, especially in the crypto related stuff, I was like, man, I'm gonna try and just keep my mouth shut about it because I know there's some people sitting in some pain. At the same time, like, this is the market, and like it doesn't care about your feelings.
Let's talk about it. Let's talk about Bitcoin. We can go into whatever alts we want to. But guess what? We're in the same damn range that we have been in since July. So we've got, how many bars is that? 14 straight weeks of this range. And you think you're going to break out, and you don't, and you sell off, right? So we know up here at 124, 125 range, there's some resistance up there. It's found some sellers, right? But every time it comes back into 108, it's getting bought up. So I don't know what to tell you other than I would much rather play against that buy wick than that low wick, right? Yeah. Like eventually these are going to get taken out. But this right here shows me that's pretty solid support. I don't know, GP. Am I making shit up?
No, like I think if you take into the fact or factor in the exit liquidity that sits at the top, right? Like you have Sailor who only buys all-time highs, and everyone freaking knows that, right? Like I saw that post that, oh, we bought X million Bitcoin at $123,000 a piece, and I'm like, how is that possible, dude? Like, how?
Yeah.
But he everyone knows that he's essentially exit liquidity for the moment, right? So they can sell to him and buy back lower, sell to him and buy back lower until the range breaks out, right? This is what it feels like. This is what like real time trading against the worst trader on the planet feels like. Yep, that's this one. He will eventually be right because Bitcoin will go higher, but right now he's maybe it's a back of the room handshake conversation, but like I will buy whatever you're selling, right, at whatever price.
Well, I teased on Monday that it's my NVIDIA thesis, right? Like, do I care in 5 years that NVIDIA was trading at $180 on October 15th, 2025? I will absolutely not care that NVIDIA was trading at $180 in 5 years from now. I can guarantee you that.
Yeah.
And that's the Sailor's thesis. And I understand buy the asset, not strategy, right? Like I hear you. But at some point when Bitcoin goes, strategy is a multiplier of Bitcoin. And I've heard a lot of people say that correlation is broken. But we'll see. We'll see how it goes when we break through this 125, 126 level.
It is broken, right? Like the same correlation that existed in 2024 does not exist anymore. But that was trading close to what, 2 times NAV?
Yep.
And now it's getting closer and closer to that 1 times NAV.
Right.
So you're actually getting in fairly decent value of MicroStrategy, even though I'm not a huge fan of his, but you're getting to the point where you're going to be essentially just buying the stock to buy Bitcoin, right? And so if they get closer to that 1-to-1 NAV and then Bitcoin starts expanding in price, the expansion happens in MicroStrategy price as well.
I think our conspiracy, Nick, is merely moments before Twitter fingers goes live with a post, you have all these short positions opening up in Bitcoin and across the market. That is not coincidence, in my opinion, and I'm not calling foul. I'm just saying it's not coincidence.
No, but I think it's even bigger than that. Like, I think like it's like I almost feel like that's like a like small beans compared to the bigger players that are even bigger than the shorts that are trying to accumulate a bigger size position in this thing. Because I think that like that's just kind of what I think is happening with Bitcoin is that it's now being like, I don't know, you've got everybody, like the dude from BlackRock, like everyone is out there touting it now and like basically saying like you need to adopt this, and if they want to accumulate, they need those spike lowers.
Yeah.
I think that the short, like the Trump kids throwing on a short or whatever, is almost like a scapegoat or just small beans compared to who stepped in to support this thing when it gets
both
sold
ways, right? You just play it both ways. Like we can profit on the upside or the downside. And if we can profit on the downside and give us a chance to reload lower, or our friends to reload lower, we're all better for it. And why do I care, if I turn 6 million into 180 million?
Yeah. I kind of like what makes me chuckle about it all, I think really is the guys that were absolutely levered to the tits in these like shit coins. Like if this is the game that they're playing and how they're going to play crypto in general, because that's probably the easiest, that's probably like, this is the easiest market to probably manipulate and play these games because it's not regulated whatsoever, correct? It's like, so there's no real oversight into like what people are doing. There's no such thing as like insider trading or any of this kind of shit. So it's like, if you're going to play in that arena, loading up on massive margin and leverage is so irresponsible. I can't even like, I don't know. Just the stuff that I was
in the degenerate world that we live in, right?
Yeah.
Like I have an aggressive, but by today's standard, a very conservative run portfolio, right?
Sure.
Like I am levered in crypto on the long side. I have a lot of semiconductor exposure, and there is no dividend stocks. But I'm not playing all these bios, and I'm not doing everything else. And 10 years ago, someone might have said, Ben, you have too much volatility, too much beta baked in your portfolio, right?
Sure.
But that's not the thinking in 2025. It's I need to turn my $100 into $10,000 by next week, if not sooner.
Yeah.
Right?
That was the crap that I was like reading where I was like, dude, this is kind of frustrating. Like they're like, they're supposed to be like poor me stories. But then they like, I don't know. Like I couldn't wrap my mind around it. But yeah, you're right. I mean,
we're playing the lottery with crypto and options, specifically call options, right?
Yeah. Yeah.
You think?
What was the question?
I said we're playing the lottery with crypto and call options.
Yeah, there's a lot of that stuff, right? But the leverage stuff is actually good and healthy for the markets, because that, like the money eventually goes in one place, right? And it's in Wall Street hands, and so when it's sitting in someone else's hands and it comes into Wall Street hands, you can pretty much guarantee that the market's gonna move higher over time, right? Like that wick was caused because someone was sitting there waiting to buy that, right? And no one, like you couldn't execute. I don't think anyone could execute on buying those. Even if you had in stink bids, right? They weren't filling. It didn't matter. So it's all part of the game.
I'm just glad I missed out. I'm glad I wasn't able to look at my account or do anything stupid on Friday. I mean, you know me, I probably would have bought something, whether I regretted it later or not.
I mean, I think that was the play, though. I mean, like the play was to like buy those stink bids if you could grab them, or buy those.
I don't think it was orchestrated for you to buy it, Nick.
Yeah, for sure, for sure.
I think that's the whole point.
I guess the reason I initially had kind of brought up or had texted you guys about crypto is because I think so. I was like, looking at Bitcoin and Ethereum. I think you guys know, like, I love the ABCD kind of legs and kind of patterns. So if you pull up like Ethereum and go to the daily, kind of the way I'm looking at it is like two different ways. And I kind of, Ben, I tweeted you the two kind of like options.
And I loved it.
Right? Like you have, and I think especially someone that's bullish crypto, I think both options are like both give an incredible opportunity to like leg into a position. So you can either look at like that wick low, into 3,500 as your A point, the initial kind of pump higher into 42 as your B point, and then where we're sitting right now, or we won't ultimately know if this is the C point until 42, 4,300 gets taken out.
You're saying this is case A and this is case B.
Flip over to the daily. Oh yeah, but flip over to the daily. So the wick low would be your A, and then you've got your B point kind of how you have it drawn out, but just a little bit shorter term. So if this is the wick, your C point or I'm sorry, your B point, and if you're, again, already long or looking to enter Ethereum, that 42.88 is kind of your breakout spot. And the measured move on that puts you right back at highs, which I would be thinking if price pushes back to highs at this point, this is what's gonna lead to it breaking out. On the flip side,
if I just eyeballed that, how'd I do?
Yeah, totally, exactly. The measured move to the downside, if we do take out those pivot lows, that wick low on Friday, the measured move is at 31.69. That's the 50% retracement from the high, from the recent low to high. So the low back in April to the recent high in September. And the 200 period moving average is right there in alignment. So you've got a lot of confluence kind of right there in that. Let's just call it 3,200, which is another, like, it's a bull market. I don't understand. We've kind of talked about it. Like, I don't understand like people fighting the trend, looking for tops. So I'd rather be looking for low risk areas to add to my position rather than trying to short. I've never shorted crypto. So I don't.
Nick, I wanted to wait for this conversation. I didn't share my chart with you this morning after you did that.
Oh, sure.
I'll show you my expectation. You ready?
Yeah. Inverse head and shoulders. Yep. I had a feeling that's where you were going with it.
That's my expectation.
Yeah.
So I think we faff around here up to on ETH probably around 4250, 40. I'm not going to say 4,300, and then come right back down and test about 39 something before we hit the launch pad. And this is probably scaled out a little bit. I know I shared this with you guys yesterday while I was traveling, but we're expecting ETH staking any moment on these ETFs. So I think that's a major catalyst. Now, is it going to be a sell the news event? I don't think so. I think that's very bullish for altcoins, not just Ethereum. But we'll see.
The structure you have here, Ben,
yeah,
like that inverse head and shoulder, like aligns with the longer time frames, right? You're sitting in a monster monthly cup and handle on Ethereum, and it's just been channel flagging for the last multiple weeks, right? Multiple months. And so you're sitting here, you can either call that a cup and handle, or you can call that an ascending triangle, whatever you want to call it. the structure is bullish on one of the largest time frames, and so like when you see the structure on the larger time frame, your bias to me has to be more geared towards a breakout, not a breakdown, right?
Yep.
When you see it on the daily and weekly. So those are I think that's the patterns that our eyes tend to follow through on when you know that the larger pattern is bullish. So
you know what I wish I had? I wish I had a nickel for every time that everyone just panic sold and declared the bull run is over, for them all of a sudden to just rip it higher, right? I wish I just had, I don't even want $1. Just give me a nickel for every time that's happened, and I'll be net positive.
It is literally the playbook of small caps. It is.
Speaking of,
it is. you like that transition?
I loved it. Segue.
It is literally the playbook. I posted the chart over the weekend, and I asked a simple question, and I said, what if you're wrong? This is a 4-year base, and even today on the breakout, they went back and fucking crushed it for no reason whatsoever. They are fighting the tide for the breakout here, but we've been talking about how small caps have been the COVID structure since this meltdown happened in April, right? It has taken longer, absolutely, because J Powell can't cut rates fast enough, and he's data dependent on I don't even know what the data. All the data's wrong. I don't know why you can be data dependent, but
fire them all.
I can't believe how smart and dumb people can be in the same context. It is mind-numbing, but
shit go fall.
Yeah,
it should go fall. And this breakout is a pattern that happens so often in IWM. It looks like it's going to break out. It fails. If you go, you're on the monthly right now. If you go to the weekly on this,
yep,
we had the exact same pattern happen in the beginning of August. Do you remember the August 1st selling that happened? It was like nonstop, straight down 3%, right? That weekly candle there, that was the first week of August. Same thing, right? We went sideways for a few weeks and then shut the bed, right into that moving average that's there. And what do you see about it? It's stair-stepping through the rising moving averages one by one, right?
It's stepping in the name of love. It's stepping in the name of love.
That's my whole point. But they consistently do this in IWM to make you feel like it's gonna fail, and then they were look at that. Can you that is one of the most insane strongest candles in the market right now on a weekly basis, right? You had this massive kind of reversal failure, bearish engulfing week right into the moving average. We didn't even touch that low this week, and now we're breaking and clearing that prior highs. People still will call this, let's short it. And dude, yeah, you can short intraday, but my conversation is not intraday crap. It's where we're going. And what participated in that conversation is the stuff that matters, right? Like IWM yesterday was breaking out. Do you know why? Not because of Rigetti, not because of quantum, but because of regional banks. What do regional banks support? Regional banks support all small businesses in this country, a predominant amount of small businesses in this country. So just take your cues for what they are. But yeah, these shakeout, bakeout candles are fantastic.
So, GP, that leads to another thing that really was grinding my gears a little bit on Friday. Well, throughout the weekend. I understand that we are always trying to label things. And correct me if I'm wrong, but I always thought an engulfing, the solid part of the candle had to engulf. You can't engulf with a wick, right?
It's usually body. Bodies are
engulfers. The body has to and look there. It's not an engulfer. Let me show you this one. Look at there. That one's an engulfer. Let me show you this one. Not an engulfer. So I just think, I know I'm a stickler, just like you're a stickler about a head and shoulders is a topping pattern. It can't just show up anywhere. We can't call everything just anything we want it to be. And if we do, then what's the point of even having names for stuff? Sorry about that. Nick.
Same.
A lot of it's though in context to like the most recent market behavior, right? Like, yeah, you could you could definitely make the argument that it is an engulf. You could make the argument that it's an engulfer and it's a bearish engulfing pattern. You could make the argument that like it's bearish. It's going to lead to lower prices, but at the same time, we're in an uptrend. And over the course of the last, I don't know, since we've pretty much bottomed, so let's just say the last 6 months.
I mean, I can make the argument that GP's still got his weight rack behind him and not a shelf full of books.
Yeah. Every shake bar has been exactly that, dating back to the podcast episode where we were talking about Google. That was basically May 7th. That was May 7th.
Sure was.
And nobody was discounting the fact that it was a nasty ass bar. But the point was that like it didn't get the follow through. And so you can again argue the engulfer bar and you can argue the bearishness of it. But if the behavior, the follow-up behavior is not what should be, then
it wasn't.
It wasn't. Yeah, like I don't know. I kind of like brain farted there.
Plain and simple, it wasn't. But we were talking about the small caps.
Yeah,
Nick,
sorry.
You made a take earlier about the mags and specifically NVIDIA.
I don't remember. What did I say?
Well,
when we were talking about crypto. So we're heading into EPS season. We've got Fed coming up. Price has been more or less in a range, or like just going like Bitcoin, Ethereum been in a range for the last 3 to 4 months. NVIDIA been in a range for the last 1, 2, 3 to 4 months. Apple's looking pretty good here. It's been basing or been in a range for the last month. Microsoft, we talked about Microsoft, kind of same thing, been in a range since the last 2 to 3 months. I think we should, like, if we're seeing the IWM breakout and MAG and some of these heavy hitters have been range bound and basing, like we should see some definitive resolution come EPS season, or whether it's the Fed that is like the catalyst that's going to bust us out of this. If we roll hard, then you could probably argue that like maybe NVIDIA is in kind of like a stage 3 kind of like, I don't know, short-term distribution phase or something. I'm certainly not leaning that way because again, the trend has been up. I would be leaning to the bullish side, as in we're going to resolve. The trend is going to resume higher after this consolidation period. What I didn't particularly like about NVIDIA, and like we'd kind of touched on it on the IWM last week or the week before, whatever week that was, it's like I don't really like that it kind of tried to break above the 183, 184 and then reverted back into the range. But if when that happens, if my initial instinct is to, or like gut reaction is to think that price is going to revert back to the lows of that range, or if it was an actual breakout failure, it might undercut. So you could say, yeah, sure, maybe NVIDIA might head back to the 160s, but from an optimistic viewpoint, even if today if it put in a low today, like it's putting in a higher low and it's sitting on the 50-day. So
and bounced at the 9 weekly.
Yeah, bounced the 9 weekly.
I've got it right here on the screen. You can see it.
Oh, yeah. So I think that there's a lot of I don't know, positives out there, but I guess kind of to the beginning of our show, and as GP pointed out, like a lot of it is backfill fuckery. Like if you're just trying to trade breakouts, you're probably getting fucked a little bit, especially on these back tests, because you're more or less round tripping your trades, rather than if, let's say you were buying weakness or something, then you're probably sitting okay.
It's constant round tripping. And you just have to what you have to keep in mind, Nick, right? I think this is probably where we are in Friday's bar.
Yeah.
So if you're trading breakouts, you are not trading an actual breakout, because we're still sitting inside the range of Friday's bar, right?
Yeah.
So you gotta take your profits at positions until we break one way or the other, right? So like I talked about the 61% retrace. We're just taking it out now. But if you just put on fibs of the bar from Friday, you can set your ranges and trade around it for now, right?
Yeah.
But that's the regime you can't just be like, I'm going to trade a breakout, but I'm in this massive engulfing bar from Friday. And so we're still figuring out what the direction is, whether it's up or it's down. So you got to take profits, and you got to be quick here, especially. But they're not doing it immediately, Nick. They're also giving you time. Like yesterday's tweet that came, I was talking to my crew on Discord. It's like this is not breaking out. They're gonna flush this, right? Like, and then like 5 minutes later, the tweet comes out. It gave you almost an hour at that range to get out or trim down positions. So I think you have to keep in mind that we're still sitting inside this nasty bar, and you got to see what the price action is in that nasty bar and take your ranges up and down. And if you're trading intraday, right? If you're day trading, whatever. If you're not, then who cares? Don't ignore me, right? It doesn't matter.
I mean, if you were playing the extremes, I actually had my finger on my SQQQ hedge button yesterday, and like I couldn't get myself to touch it, and sure as shit, like we bounced right off the lows. I didn't like that was a kind of rather be lucky than good. Like it certainly wasn't I was lucky. Like we very well could have taken out the lows and capitulated lower, and I probably would have chased it and probably hit the button. But on the flip side, I was thinking when that happened, or right shortly thereafter, I was like, God, that was like from a day trader's perspective. I was like, dude, that was an old me behavior. If I would have been day trading, I would have been thinking for sure we're gonna flush this. We're gonna take those lows out, rather than like, oh, we're in a range. Maybe I should buy the low retest versus not. But I don't know. I don't know where I was going with that.
If you guys don't mind, can we walk through a few minutes of the trading action? Can you go to like
one second? One second. I've been waiting. I've been biding my time.
Yes. Sorry.
So we're gonna bring this full circle to the bearish engulfer. I would still argue this is not a bearish engulfer, Nick, but we are seeing follow through. Right? This is what you would expect, maybe to get bought up and then to flush some more. And right now we are basically, I don't know, we're up off today's lows, but it looks weak compared to the rest of the market right now. I can just flip over and we'll see what everything else is kind of.
Look at AMD. It's probably just taking a breather because AMD is taking the torch.
Ding dong
on this next run.
Yes. Rotation
so
station.
Like in that
we've been doing this together for a little while. You see where I'm taking you? You see where I'm driving the bus, baby?
Yeah.
So
hi, Lisa. We're just gonna wave at Lisa. Okay, now GP, you wanted to see some of the action from yesterday. What do you want to see? The
not yesterday. Let's go 30-minute bars on since Friday, right?
On which one?
On Qs. Let's do the futures. In
Q.
Yeah. Because there's a lot more data on the futures, right? The Qs are just during real-time hours, but
30-minute bars coming up. There you are, sir.
And so, like, if you're looking at this chart, right? Like, the price action is that big red thing on Friday on the left side, right? If you draw fibs from the top of that all the way down, you'll get your levels, so to speak. Just a small education while we're on, so you can see how I look at price. It may not be how you look at price. All the way down to the bottom bar. Yep. Right. So this is what I was talking about: the 61% retrace, the 50% retrace. If you're looking at this, we had this big flush on Friday, right? That candle right there, and then since then we gapped up, right? And then we came to the 61% retrace. We rejected, tried to push higher, rejected. And then the final flush was yesterday, where we came back and went to the gap up from Sunday, wicked off, and then went higher. And so what do you see in this pattern is that price after the Friday bar has continued to make higher lows and higher highs in this range, right? So now your assessment of this bar on Friday should be that it leans bullish. And now you have a tradable range that you can kind of go through. But if you're just trading, look, as I was talking about yesterday, right? How many 30-minute bars did they give you an opportunity to get out at the 61% retrace? What is that? 5, 6, 7, almost 2.5 hours where they couldn't break above it. And what, like, we know as traders, when things stall and can't break above, usually there's a quick flush. You want to attribute to the tweet, but you can have a bit more predictive analysis around this stuff if you understand the behavior of how these charts work, right? And so when you start to struggle, I'm not saying it's going to have a flush. It could break to the upside, right? A tweet could have come out and said, let's go higher. The tweet came out about fucking cooking oil of all things. It was so ridiculous. And we flushed, right? They've created this range at the 61% retrace. And when it breaks that range, that's the direction it's going to move in. And it was quick. It wasn't easy to catch it, but this is just a little bit of understanding price action and movement, right? So
yeah, I appreciate that.
Yeah, no problem. It's this is I tweeted about this over the weekend. I would talk about this, how I was expecting this big flush, not on Friday, so to speak, but from the 67.40 level, Ben, that we talked about.
Yep. And
I was prepped, I was hedged, and I still got screwed because I chose the wrong hedge. And it's like my expectations when we flushed, we haven't tested the 4-hour 200 SMA on any of the indices for months now, right? And so my assessment was that when we flush, we're gonna go straight to this the 200 SMA on the 4-hour. So I was like, okay, what's the best ratio of droppage? And I chose gold as my hedge. Because why? If you look at gold, the GC.
All right, futures.
Yeah. If you look at gold, this is what I'm saying is, even when you have things pinned right, you can butt fumble it like Mark Sanchez, right? So I felt very Mark Sanchez on Friday.
Just don't get in somebody else's vehicle and start allegedly.
So if you go to the daily bar here, right, on this, and so I shorted it on that. You see that big red candle, right? That's huge volume. And so the move down to the 4-hour 200 SMA on gold was a little over 8%. So I was like, oh, I shorted that. And then the market flushes and gold goes the other way, and I'm like, I had to cover. I lost money, and like, it's stuff to it's a reminder for everyone who's listening and for you guys as well is don't be too cute on stuff, right? Oh, optimize. Yeah. No, stick to the cues, right? Yeah. Like just don't be too cute, because even when you tend to make it more complicated, you tend to butt fumble a lot more.
I posted something about simplicity today, so maybe give that a read on old Stocktwits.
Oh,
I think it's all setting, and I don't think anything that's happened over the last 5 trading sessions have changed our mind on what we think is going to happen toward year end. Correct?
No,
not right now.
Yeah, I mean, things can still change, but as of this moment, as we're talking right now, nothing has pivoted us to throw away the thesis that we have that we're higher from here into quarter one.
End of year 2020 is always, or has been, in the back of my mind, where we do see a flush that gets bought up. We fail to break out from there. We kind of flush again and either put in a higher low, we retest the low, and then we
end of 2021.
No, end of 2020, right there, right where you got the pointer. So you can see, right there. That kind of range. That range at the end of 2020 has been in the back of my mind, and thinking that like we could see a flush like that, a pop, roll back over, and then it leads into kind of the melt up like 2021. Not the end of 2021 where we're rolling over into a 2022. That's not that. I'm certainly not in that camp.
I've got numbers on the screen, but I'll get rid of those. So this is the bar that you're referencing, that we could see this faffing around in the range.
Because
they're people really good. So that would be something that looks kind of like this down into maybe 640.
Or even as lower as like GP was thinking, like if we got like the 61 or 620 and bounce from there. I don't think we're taking out that low. Like I heard that most recent pivot high.
I don't think we're coming into here.
Yeah, I don't either. I either way, kind of like a V, a double, or a W kind of shape, which it would play into kind of the whatever you want to call it, like seasonality. We like sell off into Thanksgiving, we fucking rally Thanksgiving into Christmas, maybe see another kind of like shakeout, and then we're off to the races come January. Like I don't really want to see that happen, just because I kind of like the grind melt higher.
Randy, I think Randy's exactly right. I think we're getting some bases in progress. Compress that price action to be the trampoline higher. I think that's what's going to happen.
So exactly what GP said, like trying to be cute in a melting trending market. I find to be frustrating, and it really only fucks me because it's like, if I sell down, I can definitely redeploy that capital into like other positions or other entry into other stuff. Or it could have just been a lot easier, and I could have just been riding, So
speaking of riding, hymns, baby.
Yeah, totally.
GP loves to ride him some hymns.
Oh yeah, look at that intraday breakout. Bang it. Anyway, sorry. So hymns is a big component. I think it's the top holding, or it's like the top 5 holding of the IWM.
Neither hymns nor
Real Economy
or Eli Lilly gave up. They barely budged today when we saw that sell-off that we had a hour ago or whatever.
Yep. First Solar as well.
And First Solar. And AMD. AMD, First Solar, Eli Lilly, and hymns. Of the market, I thought those 4 by far looked the strongest.
Intel.
I wasn't looking at Intel.
Yeah, most people aren't.
Oh shit. Yeah. All right.
Why are we talking about that when Lisa sues my baby?
But the bigger one is XBI, right? So yesterday was regional banks. Today is XBI biotech, and so they're
Hims is
rotating.
not the largest position in the IWM. I'm sorry, GP.
What's that?
That belongs to Credo and Bloom and Ionic. Hims is in the top 10 though.
I said top 5, right? Something like that.
Oh, I thought you. Well, it's on the top.
Dude, it's all evenly parsed. It's like 0.3 or 0.36.
Yeah, well, I mean, 0.38 versus 0.6 and 0.7. I mean, there's a difference there, but we're splitting hairs while we're running out of time.
Damn,
Randy, you're the only one. Randy, give us something to look at here, Randy.
Wait, where's Randy? I couldn't find the chat.
Randy's been in the chat the whole time.
What chat? The YouTube chat?
Yes. YouTube chat, yeah. Sometimes you gotta refresh it.
It didn't have it, so I just turned it off. Oh well.
One of the dudes in there brought up Poet, which I've been seeing on a lot of like kind of momentum guys, cheap names list. I actually had it on my BKSY. Real quick on Poet. I liked the breakout and the breakout retest. It held the 10-day all the way. I was actually watching it, and I definitely thought and was like looking at it as it was testing, even testing the 10-day today. I didn't grab any, but either way, the only reason I brought that up was to just mention, and I posted in the chat, when you're trading these momentum names, like, you've got to live and die, at least in my opinion, by the short-term EMAs, whether it's the 5 and the 10 and the 20. Like, these aren't names that you're like trailing with a 50-day. You're either like selling into strength, or you're using those short-term MAs to trail stop out. At least in the way that I trade. So that's all I had to say about it.
Wrapping up, last minute of the show. Nick, why don't you take the floor and give us one last thing?
I mean, as I think I try to say it every week, like, do your best to think critically, think for yourself. Don't stop learning, and really just manage your risk. Even the people that you don't agree with, or like they've got something to teach you, or, you know, like, just the learning never stops. How about that?
Randy says Black Sky, BKSY. That looks really good, Randy. GP, last word.
Two things. In conjunction with what Nick was saying, if you want to learn, tune in, watch our post. We talk in detail about stuff. You guys are not alone. We're here. We're trying to make this ride as enjoyable as possible. Just tune in. It's an hour of your time. It's helpful. Second thing, be kind to yourself. Mistakes happen, even with experienced traders, in almost every facet of life. The market beats you up enough. You don't need to beat yourself up more.
I want to take the mic in my hand for this one. And I think it's, let me position the mic just properly here. The next time you will see us, the three of us will be live in Coronado, California at Stocktoberfest. Thank you, Granite Shares. We love you. I can't wait to see these guys and some of the other folks who are going to be at Stocktoberfest. It's going to be a hella good time. I'm so excited for us to be there. And really, GP's pointing his finger at me.
I got one more thing. But
okay, you can pause my rant.
No, I just want to give a shout out to the production team behind the scenes here, Ryan and Keith and everyone who helped us, and a shout out to Howard too for having us on and out there as well.
100% agree. Ryan, Keith, Howie, you guys are amazing. We can't wait to see you in California. But my one last thing really is know what you own, right? Just this is not financial advice. This is just speaking of years of experience. The things that you know, you have a better rhythm of how that stock is doing. If you know it's a good company and it's falling off the face of the earth, why is it falling off the face of the earth? Is it just some bullshit? It could be. Did something fundamentally change? If so, then that's your cue. But if it's the same good old company, and I'm going to use AMD for instance here, if it's still good old AMD, and things haven't fundamentally changed, just write it out. It's going to be okay. That's what I do, and I'm retired. So there you go. Love you guys. Ryan, thanks. Don't forget to watch us anytime on YouTube. You can go to the Stocktwits channel, click on the old community rip playlist, watch us. But we will be back here Wednesday live from California at 2 p.m. Eastern time. It'll be I can't do the math, but it'll be 3 hours later on the West Coast. So we'll look forward to that. But we're looking forward to it. We'll see you then. Thank you. We love you.